हेलो दोस्तों। आज हम क्लास 12 बिजनेस स्टडीज़ का एक काफ़ी इंपॉर्टेंट चैप्टर फाइनेंशियल मैनेजमेंट कवर करने वाले हैं। तो देखते हैं कि फाइनेंशियल मैनेजमेंट होता क्या है। कंसेप्ट ऑफ फाइनेंशियल मैनेजमेंट, इट इज़ कंसर्न्ड विद ऑप्टिमल प्रोक्योरमेंट एज वेल एज यूजेज ऑफ फाइनेंस। फर्स्ट, रोल ऑफ फाइनेंशियल मैनेजमेंट: determination of fixed asset, determination of current assets, determination of long-term and short-term finance, determination of proportion of various sources of long-term finance, determination of various items of profit and loss account. Second, objectives of financial management. Maximization of owner's wealth is the main objective of financial management. It means maximization of the market value of equity shares. Market price of equity share increases if the benefits from a decision exceeds the cost involved. Financial decisions. A. Investment decisions. It is related to how the firm's funds are invested in different assets. Investment decision can be long term or short term. A long term investment decision is also a capital budgeting decision. Factors affecting capital budgeting decision: first, cash flows of the project, the rate of return, and the investment criteria involved. Second, financial decision. It refers to the quantum of finance. It involves identification of various sources. The main sources of funds for a firm are shareholders' funds. Shareholder funds refer to equity, capital, and retained borrowings, retained earnings. Borrowed funds refers to finance raised as debentures or other forms of debt. Factors affecting financing decision. First is cost. The cost of raising funds through different sources is different. A prudent financial manager would normally opt for a source which is the cheapest. Second, risk. The risk associated with different sources is different. Third, flotation cost. Higher the flotation cost, less attractive the source. Fourth, cash flow position of the firm. A stronger cash flow position may make debt financing more viable than funding through equity. Fifth, level of fixed operating costs. If a business has a high level of fixed operating costs, example building, rent, insurance premiums, salaries, etc., it must opt for lower fixed financial cost, hence lower debt financing is better. Similarly, if fixed operating cost is less, more debt financing is better. Sixth, state of capital markets. Health of the capital market may also affect the choice of source of fund. During the period when the stock market is rising, more people are ready to invest in equity. However, depressed capital market may make issue of shares difficult for any company. Third is dividend decisions. The dividend decision involved here is how much the profit earned by a company after paying tax is to be distributed to the shareholders and how much of it should be retained in the business for meeting the investment requirements. Factors affecting dividend decision are: first, earnings. Dividends are paid out of current and past earnings. Therefore, earnings are a major determinant of the decisions about dividends. Stability of earnings. Other things remaining the same, a company having a stable earning is in a position to declare higher dividend. As against this, a company having unstable earning is likely to pay smaller dividend. Third, stability of dividend. It has been found that companies generally follow of stabilizing dividend per share. Fourth, growth opportunity. Fifth, cash flow position. Sixth, shareholders preference. Taxation policy, stock market reaction, access to capital market, legal constraints, and contractual constraints. Thank you.